So today we have with us Rahul Jain, who heads taxes for ByteDance India, and will share insights on Budget 2023. Rahul has over 15 years of experience in corporate as well as personal taxation. Prior to ByteDance, he was associated with E&Y as a senior manager. Over to you, Rahul. You may please share your screen and proceed with the presentation. Thank you.
Sure. Thank you, Vinkat. Let me share. I hope you can see my screen.
Yes.
Okay. So thank you, Vikamjit and the Bellwether for inviting me to this session. So I'll start with my initial remarks on the budget. So as we all know, the budget is a very balanced budget. However, this time the intent of the budget is to maintain the tax stability overall, widen the tax base, and reduce the compliance burden, whether it is on the individual or on the corporates and the startups. And finally, there is something for the individual to cheer about in terms of the tax relief for the individuals. And the Honorable Finance Minister have also actually recognize the growth of the Indian startups. So in this presentation, what we will talk about the impact on the individuals, whether it is including the HNIs and the ultra HNIs, and some of the impact which it will have on the startups. Hold on, I think. Let me just share it again. Just hold on.
Sure.
I think it's some problem.
Piyush, should we share the screen and then move on with the presentation? Can we do that?
Is it visible now?
Yeah, it's visible now.
Because screen sharing, that presentation is not working, so it's a normal version now. Okay, so I'll start about the highlights. Maybe we can then discuss in detail about those provisions. So as one of the key provision or the key changes in the budget is the introduction in the personal tax regime, which has been changed and making it more attractive, right? So, and we will discuss in detail how the changes has been done and what impact does it have on the individuals. But unfortunately, there is no change in the old tax regime. The old tax regime remains as it is, while there are changes been introduced in the new tax regime. Another proposal which has been there is a restriction on the foreign remittance when you make an investment abroad, when you make a overseas travel. So there is kind of an restriction which is levied now by introducing a higher TCS rate. Some changes have also been introduced in the capital tax regime, which we will discuss in detail, but eventually it's somehow widening the tax base and leading to tax outflows. Presumptive taxation, it's a scheme which is for the professionals, it's a scheme which is for the small businesses. What the government has done have increased the threshold limit. That means it gives a compliance benefit to those professionals and the small businesses. For senior citizens, eventually there is something for them wherein the dedicated schemes for them have increased the limit. So it's a good proposal for them, thereby they can have more cash in their retirement kitty. New tax is introduced in cases where there is a maturity of high premium life insurance policy, which eventually impacting the HNIs, which we will discuss how. And also if there is a gift by a resident individual to a non-resident, to a not ordinary resident. So there is a specific clause, how do we define NOR, not ordinary resident, but if a gift is been given by a resident to a NOR, it is not taxed. Leave encashment or retirement, earlier there was a very low limit which was just announced in 2002 year, but now it has been revised substantially, which is a good move, I guess. For the startups, the existing tax benefits for the startups, it has been extended for new startups, and the angel tax is returned for the non-resident as well. So angel tax is been extended for the investment from the non-residents. And another provision which is a new altogether a provision which is related to the taxing the winning from the online game. So it does impact the online game starters, for example, Dream 11 and MPL and all that. So we will discuss how does it impact to those startups. So first we will discuss about the tax changes impacting the individuals. So there is a change in tax rate. You would have heard about it as of now. So I'll just briefly summarize and then we'll quickly jump on the analysis what I have done here. So the old regime, there is no change. If you see, this is the old regime, there is no change. It's remained as it is. For the new regime, it's just only a tweaking of the bracket. However, the benefit, they have tried to give more benefit in terms of tax relaxation. The major benefit or the major change is in the surcharge for the high ultra or the ultra HNI, wherein the earlier surcharge rate was 37% and now it has been reduced to 25%. So I would say the government intent here is to make the taxpayers opt for the new regime, because in the past, because regime has been introduced for past 2 years, and it has been seen that the taxpayers were not opting for the new regime. And what I now observe after listening to FM, the finance minister, basically they want the taxpayers to opt for the new regime, and that is the reason why the government has made the new regime as the default regime. So, for example, that if you file your return for the next year, for April 23-24, the computation would be done as per the new regime. It's a default. But if you still wish to opt the old regime, then you have to click it. As of now, it's the vice versa. The default regime is old regime. You have to opt for new regime. But in the next upcoming year, the default regime would be the new regime. So that's a big change because the government wants to the taxpayer to adopt the new regime, and it is going to, I think, maybe somewhere 1 year or 2 years down the line, maybe the government may just delete the old regime altogether. So it's a I would say is a transition process that is happening, and one should review their salaries and salary structures, that whether we should opt for new regime or not. And what else in the new regime other than the tax slab changes? It's a standard deduction of, which is a minimum standard deduction of 50,000, is now been extended to new regime as well. Earlier it was only in old regime. The another benefit which has been extended is that income up to 7,50,000, there is no tax, which is for the normal taxpayers basically. So there is no tax to that, and there is no change in the education and health and education service, still the 4%. So if you see this, yeah.
Actually, this slide, if you can just more change your mode to presentation mode, that will be.
The only concern is that I'm not able to project it, the presentation mode. Let me try again.
Because
Or maybe Vikram, can you project presentation mode?
I'll ask that. Piyush, if you can do that.
Yeah, let me check, sir.
Yeah, because some problem is in the laptop. Yeah.
This is much better.
Go to,
Thanks, Ashish.
Yeah. So now go to the impact analysis. The next slide. The next one. Yeah. So what I have done, I have quickly do a very brief analysis of the change from old regime to a new regime. And if you see the last column, which is green, it's actually telling you the benefit of opting the new regime. That's why it's a green. That means you will save tax cost, or you will pay less tax in the new regime, and that's why it's green. Otherwise, it would have been red if you pay more tax in the new regime. So understand that what I've done here, the gross total income, I've taken the gross total income as the same. And the taxable income is different in the old regime and new regime because the deductions which the government allows in the ATC deduction, which is normally like life insurance and normal ATC deductions, is it's only available in old regime, but it is not available in new regime. The assumptions basically, I have just only claimed here as ATC deduction and the standard deduction, and that's why there is a difference of income. And if you see, there is a difference in the ETR, which is effective tax rate, when I compare to the tax payable. And then the gain. So if I go to, if I see the last row, 50 lakh of the total income, the taxable income in old regime is 48 lakh. New regime, it's 49 lakh 50,000, only standard deduction 50,000. The effective tax rate in the old regime would be 27.14, while in new regime it will be 24.9. So somehow the difference of maybe 2% somehow, and the tax cost benefit would be 70,000. But understand, it is only one factor which I have considered, that I have not considered the other income. I have not considered the HRAs, which maybe you're part of CTCs, right? I have not considered 80D deductions. I have not considered 80E, which is health insurance, which is your education loan. I have not considered capital gain. So the reason why I'm bringing this aspect to you, that it is not a standard rule or standard result for an individual. It can be unique. So if, for example, if I put in my income and all the deductions and all the salary structure, my capital gain, my saving bank interest, there, and I compare my old regime with new regime, there may be a possibility that I would pay more tax in the new regime, right? But if somebody, if there is another individual who is earning only this thing, there is no income, no capital gain, and other, and there's nothing beyond this, right? So that means he may opt for new regime. So what I want to highlight here is that it is advisable for every individual to please look through your salary structure, please look through your income. Maybe you can take example of this year ending income, do your own calculation, maybe with the help of your consultant, and evaluate where are you really standing on the tax benefit. Are you really getting the tax benefit, or is there a loss to them, loss to you in tax new regime, right? Next slide, please. So what I've done, again, a quick calculation for the income beyond 50 lakh, because that's where the game of surcharge plays. Because of, if your income is more than 50 lakh, the surcharge kicks in, which is the different rate, 10%, 15%, 25, and 35, which is now been reduced for the HNIs. Now, if you see the ultra HNIs, which are having a gross income of 5 crore and above, there is a significant reduction in the ETR. So currently the
8 minutes, sir.
yeah,
Sorry.
so
Yes, sir.
yeah. So currently the ETR in the old regime for the ultra HNIs having income of more than 5 crores, it is 42.121%. And now with the reduction in the surcharge from 37 to 25, the ETR has reduced significantly, which is 38.2%. So you see the comparison around 4%, I guess, and which is a huge amount of 19 and 20 lakh, right? So that is a good thing for ultra HNIs. But again, I would still suggest for all the individuals, the HNIs, the ultra HNIs, please review the salary structure. Please review all your income. And I think your year ending this March 23, you can take this base as your income for the proposed next year and do the calculation as per new regime and old regime. Your consultant can help and eventually identify where are you currently standing in terms of tax cost outflow, which may be in red, and tax inflow if you save some tax, which may be in green, right? Next slide, please. Another impact or the changes which has been impacted on the foreign remittances. So what the government basically has done here, they have introduced or not an introduced, basically they've increased the TCS, which we call as tax collection at source rate, or for you it's only an increase in tax rate. So if an individual do a remittance overseas, there is to be a tax which will be collected by the agent and deposit to the government, right? So as per the old CTR's rate, it's generally the 5%. If you see the table, the second column, old TCR, the 5%, 5%, 5%. Now it has been significantly increased from 5 to 20%. And the two are the main things to that: overseas tour and overseas investment, right? So I was reading the intent behind this, why the Honorable FM decided to increase the rate, and that too very significantly. It's 4 times. So the intent here is they want the people to be Swadeshi. They want them to travel within India. They don't want travel abroad, because the more you travel in India, it will boost the tourism sector. And as well as they don't want the money go to outside India. They don't want money to go overseas. They want money to be remain in India. If you invest here in the real estate, and if you do some investment within startups, in the companies, in the stocks, in Indian stocks only. So what they're really discouraging here is that they don't want you to invest outside US stocks or basically the overseas stocks, the real estate, and do a less overseas travels. Now, another aspect to that, why they really want to do that, they want to widen the tax base. I'll tell you how. So they have a data wherein they are saying that people are traveling overseas, but if they compare, if they do a data analysis of the tax returns, they are not paying taxes. They are paying taxes, but maybe very minimal as compared to their spending on the overseas travel. So what they really are doing, they're widening the tax base. Your tax will be deducted TCS, and you will get the tax deduction again. This, if a tax is deducted, you will get the credit against your final tax liability. So it will make a compulsion to you to file the return and get the refund of this tax credit, and that's how the government is increasing the tax base. So it is very important to understand on this why government is doing all this stuff. Next, please. So capital gain tax regime, it's again an impact maybe for the HNIs again. I'll tell you how, because if you see the first point, it's a limit on capital gain tax exemption for reinvestment. So if you sell something, maybe the any asset, which may be stocks, which may be your residential property, and you want to invest that sum into a new residential property, as of now there is no tax on that capital gain. But now what the government, and there is no cap, you can claim as much as any deduction you can. But now what government has done, they have limited deduction cap. They have limited. They are saying that only 10 crore capital gain will be exempted, and then beyond it will be taxable. So what government is impacting here is the ultra HNIs, because they sell a good investment or a substantial profit and then reinvest in residential property, basically to save the capital gain tax. Now there is a cap. It does have an impact on the ultra HNIs. And similarly, in the third bullet, the capital gain tax on market linked debentures. There are market linked debentures. Currently, if you sell those debentures, it is taxed as long-term capital gain at 10%. Now, what the government has done, they change the characterization. Long-term capital gain, it's no more. It will be short-term capital gain and will be taxed as per your slab rates, which is the old regime or the new regime. So it may result in higher tax outflow, again impacting the outflow at the HNIs or the individual level. One of the other provision is that conversion of gold, physical gold to electronic gold receipt or vice versa. If you do a conversion, there is no capital gain tax. They are saying that it is not a transfer. So it may be a regularization provision. But the two provisions on the capital gain tax is the cap on the investment limit and is the short-term capital gain tax or change of characterization for the market linked debentures, which results in tax outflow for the HNIs. Next, please. Okay, I want you to understand this scheme. Maybe some of you opting for this scheme, but may not be some of you. This is a very beneficial scheme for the professionals, which are defined, maybe doctor, chartered accountant, the technical person, wherein a benefit is given to them that you may not need to require to maintain proper accounts, and till your income is only 50 lakh, and you only pay or you define your profit rate as a 50% of the 50 lakh, which is taxable income is only 25 lakh, and you will not require to maintain any books of accounts, need not require to do any tax withholding and all that. So just file your simple returns and pay the tax on the 50% of the gross receipt. Now what government has done, they've increased the limit from 50 lakh, they've increased the limit to 75 lakh. That means more individuals are now being given the benefit. It's a good step, and I think you will see more increase in the limit, maybe 1 crore and 1.5. So they want to reduce the compliance burden on the individuals, on the professions. Similarly, for small businesses, the current limit is 2 crores, on which the tax payable is only 8% or 6%. But now this limit has been increased to 3 crores. So more relief in the compliance cost. They want more. They want to reduce this compliance burden on the individuals. Next, please. For the senior citizen, I think the government has finally provided some relief to senior citizens. There are two schemes for the senior citizen, which is senior citizen savings scheme and similarly for post office monthly income scheme. What government has done, basically, they have increased the limit so that senior citizen can invest more in those schemes and can have more cash in their retirement kitty. And I think it's a good step. It will provide them a kind of a security that they can invest more. They can earn a fixed interest, which is paid quarterly, and it gives a sense of security to them. And it's a good step for them. Next, please. Okay. There are other changes, maybe. So again, these are changes for the tax, which is a tax introduced. If a resident individual is sending a money outside, which is without any consideration. When I say no consideration, there is no transaction. It's just a gift of money. So currently, if a resident send that money to a non-resident, it is taxable. But now what they have included another category which is not ordinary resident. So there is a clause how to define those not ordinary resident, but they have now widened the tax base. So it will be taxable now. For the life insurance policy, I would say the high premium life insurance policy. So what government has done here, again impacting the ultra HNIs. If you are paying if you do have an insurance policy and you are paying a premium of 5 lakh or more aggregate in a year, and you received any sums from them, any maturity receipts, any other receipts, that income will get taxable in your hands. As of now, it is not, but it may get taxed. So intent here is that what HNIs may be playing around, that they have some money, they invest in some kind of an investment come insurance policy, right? And they may get the maturity maybe after 1 year or 2 years, and the money they get in along with some interest or along with some profit, that profit is not taxable as of now. But now that loophole is plugged, or maybe I would say not the loophole, basically they want this tax planning to be mitigated, right? So it's widening the tax base for ultra HNIs. Now the best point here is, which gives a food for thought, or maybe for tax planning for the ultra HNIs, that it will not impact your current policies. It will impact your policies going forward. That is, if you take a policy from 1st April onward, it will then impact. So maybe then you can plan whether you really wish to have it or no, and then you can do a cost benefit analysis, that in cost, when I say the tax outflow, if you do an investment in such policy, and the amount of profit you get from that policy. So your consultant can help in doing that kind of a cost benefit analysis. Next, please. Okay, so these are again a benefit. If you see the third bullet or third row, which is increasing leave encashment, significantly increasing the leave encashment limit from 3 lakh to 25 lakh on retirement, which is a welcome move. I think something the government has considered. While the above two is only a rationalizing provision, that if an employee or an individual is getting a rent-free accommodation from employers, there is rules are defined how to do that calculation. But now that rules may be changed later on. And if you do a reduction in EPF withdrawal, and if you don't have PAN, or if you don't provide the PAN, the current tax withholding rate is 30%, but now it is reduced from 20% because of the other provision. So it's only a rationalization. So I would say that what is the next slide, please? I think it's done for the individual. Yeah. So let me just summarize for the individuals. Maybe I'll take the questions at the end. Tax relief for the individuals, for the HNIs and HNIs are there. New regime is the default regime. But I would still suggest for all to do a review of all your salary structure, take a help from a consultant, and they can really help, because every case is unique. Some may get benefits, some may not. So take a very calculative call. Don't just fall for it. The other changes, I would say that the government has tried to widen the tax base for HNIs, whether in the form of your foreign remittances, if you do any overseas travel, not for the HNIs as well, on the foreign remittance, also for the individuals. If you do your foreign travel, if you do an investment outside for the stocks as well, it does impact you. There is a tax impact for the ultra HNIs for your capital gain reinvestment, for your sale of market linked debentures. So in and out, there are some pluses, there are some minuses. There is plus and minus everything for the individual and HNIs. Just do evaluate each proposal in detail depending upon your categories. Please. Next, please. So I will discuss 2-3 provisions about how the provisions impacted the startups. The next slide, please. So the Indian government have recognized the growth in the Indian startup ecosystem. We are ranked 3rd in the world. And already Indian government provide tax benefit to those startups in terms of your 100% deduction of tax out of for cumulative 3 years. So now what they want, that a newly incorporated startups in the next year, they should also get those benefits. So it's an extension of benefit. It's a good thing to happen and support to the startups. Next one, please. Similarly, as you know that startups do have their losses in the initial year and they want to carry forward, right? So as of now, the carry forward can only happen for 7 years. Now the government is rationalizing the provisions in terms of this carry forward provision and in terms of this startup definition, which is eligible startup definition. So it is just a rationalizing the provision from 7 years to 10 years, but I think it's a good move again. The government is really listening to the startups to the extent of providing the existing tax benefits. Next, please. Okay, now on this angel tax, you would aware about this angel tax. It is applicable from if a startup gets money from the from any investor and it is at a high valuation, at a high premium, which is also beyond your fair market value. That income is generally taxable as angel tax, which we call as an angel tax and other social income. But now they have widened the tax base for the non-resident investors. So if a non-resident investor is investing in Indian startup and it is at a very high value, beyond your fair market value, that will be taxable in the hands of the startups. So I think what it is not a tax loss, or it is not, I would not say minus for the startups. The only thing what government wants here, that they just want your valuation to be correct. They just do not want your valuation to go high end, right? They just want a similar playing field for the resident and as well as the non-resident investors, because as of now, a tax loss to non-resident investors, but not a benefit to the non-resident investors. So that's why they are giving us same playing field for every investors in the Indian startup. So the takeaway here that you should evaluate or you should do your valuation appropriately, not just blowing up the numbers. Try to maintain it. Next, please. Okay. The government has introduced a new tax provision altogether for the online games platform, and the reason why they want is to increase the tax base. So if you take an example of Dream 11, Dream 11 is a startup. It's an online gaming platform, and there are individual players who plays on that Dream 11 and they earn the winnings. Now, what government have actually done for those Dream 11, they have introduced a new tax of 30% on the online winning, straight rate. That whatever Dream 11 pays out as a net winning to the player, it will have to do a tax reduction of 30% altogether, right? Earlier there was a limit of 10,000, but now there is no limit. Even a 1 rupee will get taxed. Now, how it really widens the tax base? The players have to complete the KYC. They have to provide the PAN as well. So the online platform gaming will have to maintain the records. They have to maintain the record, they have to do a calculation. So it increases the compliance cost. But the government we want the compliance to be done. And that's why we want to widen the tax base, that those players who are winning should file the tax returns and we should know how they are winning and what they are winning. So I think it does impact the compliance cost of the startups, but this is there. It has been done in impacting the online gaming platforms and also those individuals who are playing on those platforms. Next, please. So it's a good change for the startup as well, maybe very specific to small and medium-sized enterprises. But if a startup is registered under MSMEs, so for startup, it's always a cash flow issue. The payment get delayed from the client. It may come 3 months, 6 months. So what the government has done, that if a startup is registered on MSME, as there is a proper, and the registration is very simple to have it, right? So the corporates will now have to make a payment within 15 days, I would say. If you raise an invoice, give the payment, payment should be done in 15 days, and similarly aligning with the deduction. If you don't make a payment within timely, the corporates, the clients will not get the tax deduction. So they are now bound to make the timely payment to the startups. And I think it's a good good benefit to the startups, helping in their workflow or the working capital flows. So I've summarized Vikram on the impact on individuals and the startups.
All right. So let me just pause. We have any further slides to share, Rahul?
I think this is done. It's a very brief slide because
Okay.
for the individuals and the startups, which
Okay.
there's not much change in the startups, but these are the specific and the changes for the startups.
Great, great. Thanks, Rahul, for sharing the insights. Sharing the taxation changes as the one should look at the tax changes structure for the next year. Then probably also looking at insurances plus investment kind of a plan for individuals to have a tax-free income and guaranteed maturity. That is something which is very interesting to look at, and obviously changes in the startup ecosystem. So let me call upon Ashish and Manuraj who would be addressing the question and answers with you. Over to you, Ashish and Manu.
Thank you, Rahul sir, for taking us through the latest provisions in budget 2023. I will request you to explain on tax on gift to non-resident individuals. So in this, can you explain like how it will be different for NRI and not ordinary resident? Kaise gift will these tax on gift will impact?
So for NRI, I would say it's a non-resident individual, right? So currently they are already covered as a non-resident in the provision. So if you do, if there is a gift from resident to non-resident, it is already covered. So there is another category of individuals which we call as not ordinary residents, and there is a specific clause. How do you define those not ordinary residents? There is a clause. There is a specific that you have to spend this much time in India and you are spending this much time outside. So there is a clause which I am not remembering. So what the government has done, they have also plugged that persons as well. That if a person is a not ordinary resident, that means he's not a resident. He is a non-resident, but as a category, he's falling under NOR, right?
Okay.
Not ordinary resident. So they have also clubbed that part. They are again a playing field. That if a gift is to be given to not ordinary resident, they have to file a tax return and pay the tax in India.
Okay, earlier there was a provision like if at the time of marriage any gift is paid to parents' gift or the person is receiving gifts from relatives, it's not taxable. But given this provision came, so how it is going, whether non-individuals will be covered under this or it will be taxable for them also?
No, so I think that so what you are calling the provision, these we called as an exemption provision. That if a gift is given for the purpose of marriage by the relative or by parents, right? I think it's still the same. There is no change in that. Or obviously, we may read the fine print of the budget once it is approved by the president and by the board, no, by the houses. But I think there is no change in that provision. If a gift is given on account of marriage or by the relatives as defined, it will still not be taxable, right? And it is only impacting on the individuals again, because it is for the income from other sources.
For both the non-individuals, for both NRI as well as resident, still any gift received during marriage, it is non-taxable as per the information which we have right now.
Yes, I think it's still the same.
Okay. Then, sir, second point, tax, if there is any, any individual is paying a premium more than 5 lakh rupees for insurance, it becomes taxable. Okay. So just throw some more light on that.
Okay, let me explain that provision again. So if there is a life insurance policy and you get a money on maturity, right? So currently there is no tax. I think there is an exemption under 10D that if there is a maturity of life insurance policy, there is no tax on that maturity receipts or on that profit margin or whatever is the margin on that, right? But what the government has now done, they have identified the high premium insurance policy, and the premium amount is 5 lakh or more. And it is not just for one policy, it is an aggregate. So let's say I as an individual may have 6 policies, right? And I'm paying 1 lakh for each policy. So my total policy premium in a year will become 6 lakh. So I will be now covered in that provision, wherein my aggregate premium goes beyond 5 lakh. right? So whatever maturity receipts I get from any of the insurance policy, it will get taxed now in my hand. That is one change. That is one change. Second, which helps for the tax planning here is that it does not impact your current policies. That means if I'm having a policy right now and I still continue making the premium on those policies only, and I get a receipt on my old policies, it is not taxable. What I'm saying here that if you opt for a new insurance policy from April 1, 2023, if you opt for a new insurance policy and then you get a maturity receipt after 2 years or 3 years, that premium will only, that money will get only taxable. So old insurance policies will still remain same, and if there is a withdrawal on or maturity receipt from those old insurance policy, it is not taxable. Only the new insurance policy. So what I wish to add here is that if somebody is planning to have an new insurance in the upcoming year, quickly do a tax cost benefit. I think now the insurance companies will also provide that if you are paying a premium of more than 5 lakh, and what you can really do here is that I think the key question could come up that, let's say currently let's say I have 4 insurance policy, old insurance policy, and I'm paying a total premium of 4.5 lakh. Let's just assume, right? I took another policy number 6 in April 23. And my policy premium is now for that new insurance policy is 1 lakh. Now, if you club old plus new, 5 plus 1, 6, the total premium goes to 5.5, right? Now, the question could be that if my premium got extended, right? 5, it goes extended. Now, the question should be that if there is a maturity receipt from old insurance policy, whether it gets taxed or not, right? So these are still an open question. I think what we really need to read through about the accurate section, what exactly they are saying that, because in the calculation, the government may say that the calculation of the 5 lakh is only for the new insurance policy. The old premium calculation should not cover, right? So again, a fine print is very critical, and help from the consultant, insurance consultant is really helpful for that.
So right now there is no clarity whether they will be clubbing the old premium plus the new premium, which we will be taking from next year only.
Yes, the point I'm saying that, see, understand, the budget is always a proposal. When I say a proposal, that government presents the proposal and it goes in the fine print once it approved. So fine print becomes the act wherein you read through the sections, wherein you read through the provision and how it has been drafted. So that actual sections have to be read through in detail and understand. And I think to my point, if you ask me the intent, I think the intent should not be to club the old premium of the old insurance at least, because that will now make the redundant of that date, the threshold date, right? If I still consider the old premium in the calculation, it will not serve the purpose. Okay. But you never know what it comes out in the fine print. You never know.
Okay. Then, sir, there is a new provision where they say that if we sell a property and we have a capital gain of more than, like, let's assume I am selling a property and I have a gain of more than 15 crore, then how the calculation will work?
Yes. Okay. I was also thinking the same question yesterday, that how the calculation will work, because the cap is on cap. So they have mentioned the cap of 10 crores. So let's say, and it's on the gain. Understand that it's on the gain, not on the consideration. Yes. Now let's take an example that you have sold a property of valuation of 25 crores, right? Yeah. And for you, the cost of acquisition was only 5 crores. So the gain is 20 crores. Let's take an example. So the cap is on the gain. What the government is saying that if your capital gain goes beyond, so they are limiting this. So, okay, the old provision, the exemption is on that 20 crores. If you invest that 20 crores of consideration in the new residential property, there is no cap. But in this provision, they are saying there is a cap of 10 crores, and they just stop there. So the question here is that, what are they really doing? Are they saying that gain up to 10 crore not taxable, but if it goes beyond, the entire gain is taxable? That is first question. Or are they saying that you will get an exemption only 10 crores, but the balance 10 crore will get taxable? That's a question. Again, fine print will come in. later on. But again, if I tell you my intent, I think what they are saying, the cap is still 10 crores. The balance 10 crore will get taxable. So you will get a tax deduction because they do not want to take away the deduction. Because if they say that gain would be taxable for the entire 20 crores, it's a huge blow. That means you are taking away the deduction altogether, right? So I think the intent here is you will allow the deduction only to the extent of 10 crores. Beyond it, it will get taxable.
Okay. Then, sir, one more provision which came, like if we are converting physical gold to electronic mode, then what are the things which we should take care? Like whether we should maintain a proper receipt, like what all precautions we should, what all hygiene we should maintain while doing so.
Yes. So I was doing a research on this. Basically, I really wish to understand the intent, right? But I was not able to get that intent from the speech as well. It was more of a provision or more of a proposal directly that if you do a conversion of physical gold to electronic gold receipts, that conversion is not taxable, right? But to answer your question, I think it is obviously to have the proper KYC, that where are you maintaining your receipts, and who is that partner or who is that entity that providing that opportunity, maybe your broker, maybe your demat, or whosoever handle that PMS, right? That is one. That person should have a proper authorization to maintain that EGR, right? Because it's not like that every person can maintain that EGR. That is one. Second, you need to have proper documentation, that acknowledgement. Maybe there should be some contracts as well, that this person is having this much of EGR and that is the terms and conditions. So proper contracts, proper KYC should be done, and to maintain it. And I think the intent would be that the government wants more gold to come in the market. Somehow that some gold may not be disclosed per se, right? The government may want that, right? And that's why they want that. Okay, you can convert, and we don't want tax on that, because they want more gold reserves, right? So KYC should be done. Understand your partner who is providing that facility, and agreements, the receipts, acknowledgement, everything should be there. And you should also check your nomination as well. If you're a senior citizen, there should be a nomination clause as well, that who would be the nominee for all this EGR, right? With physical gold, it's still there in the bank. You go to the bank locker, you can just pull out. But in terms of EGR, if you want to withdraw, what is the terms of that partner? And if there is a nominee, what is the terms for that nominee as well? So these terms are very critical.
Okay, one last question. It's regarding the changes in tax rate. Like in the new regime, they have revised the slabs, everything. So what like since the day budget was announced, there have been multiple like article coming up ki agar aapka HRA hai or some other deductions are there, and if that deductions goes up more than 3,50,000, then it will be better to continue with the old regime. So multiple articles we can like go to any social media. We have all these information floating around. So what I understand from all these going through all these tweets or posts was ki if somebody is receiving HRA or leave encashment, or like somebody has switched company, he is receiving a good gratuity amount. In that case, it will always be beneficial to go with, like what I understand, upar se ki it will be better to go with the old regime rather than the new one.
Yeah. So I'll let me tell you about my thoughts on that. I was reading about for the last 3 days, right? And the more I read in the articles, the more I get confused. I'm telling you, the more I read, I get more confused, because some articles are saying old regime is good, there is a benefit. A new regime is good, there is a benefit. But if I compare both the articles, because as a tax person I can compare, but not for a layman, I was comparing. Their assumptions are different. In one structure, they are saying they're not taking HRA. In one structure, they are not taking the aspects of capital gain. In one structure, they are taking everything. The other allowances, HRA, they are taking the HRA deduction, they are taking health insurance. And if you see my slide as well, I've taken an assumption while comparing the old and new regime, right? There is no HRA, there is no capital gain, there is no health insurance deduction. So the reason why, and good that you bring out that query, again, I'm saying that there is no unique answer to an individual. it is not a single mold that can be applied for every individual. You are unique, I am unique, Vikram is unique, every salary is unique for everybody, right? Every income is unique. So what I really address here is that don't go by the articles, don't read the articles. Everybody knows the provision that there is a change in the tax regime, right? What I really wish, or maybe as an homework for all you joiners here, is that please pull out your salary details, or not just the salary details, the income details for this year, which is ending on March 23. Take this as a benchmark and put that entire income in a new regime calculation. Simple, right? Either you can take it a help from your consultant, or there are calculators now on the online. Just download a calculator, put the income here, and you will get to know your tax. So now you will see that currently you are in old regime, same income, it's giving you a tax outflow of, let's say, 100. But if you put the same income, same structure in the new regime, which is about for the new year, you will get an outflow. Maybe it can be 90, maybe it can be 110, depending upon your income. So you can easily compare, right? So don't read articles. I would say again, don't read your articles. Reach out to your consultant. Maybe consultant can ask you for a fee because it's an exercise.
Yeah.
But again, think. It's a time to execute, not reading the articles, I guess. Just pull out your income records, evaluate the old and new. It's very simple. I think it's doable job, but the more you read the article, the more you get confused as a layman.
Okay.
Because the government, eventually, what the government has done, they have given something, but in a complicated manner. They have given something, and that has been the benchmark of these comment.
Yes, sir.
Rahul, something on the angel tax part. Can you explain the whole thing, how what was the earlier on a layman to a layman, how it was a layman, how it is changed? Because there's no difference. I understand that there's no difference.
Yeah, so I think there is nothing new in the angel tax, because it has been an old provision now. Everybody understand what is angel tax. But the current provision is actually applicable on the resident investors. When I say resident, that means I am a resident of India. I am investing in, let's say, any startup, right? The sharks are investing in Indian startups, right? They are the resident investors investing in Indian startup. So there is a angel tax on that investment, right? Now, as per the law, it only speaks about the resident investors. It doesn't speak about the non-resident. So that means, in a way, there is no angel tax on resident investor, non-resident, right? So if an investment is coming from outside, which are the big PE funds, Sequoia, Tiger, and all that, Kalari may be resident, but Sequoia specifically, let's say SoftBank, so they are non-resident investors, right? So there is no angel tax on them. So you see the disparity now. Tax on the resident investors, but no tax on the non-resident. So what government has done, they have given the level playing field. They are saying that if a startup is getting an investment from any investor now, they have omitted the word resident. If a startup is getting an investment from anyone, resident or non-resident, it should be on the proper valuation. If it goes beyond, you have to pay tax. Simple. So what government is saying, eventually the intent, don't balloon up or don't blow up your valuation. Be accurate as per your records or the financials, the projection, and to that.
I know that there's online gaming here.
Can't hear you properly.
There are some fans. Can you hear me?
It's echoing actually.
There are some fans of online gaming here. You mentioned in your presentation that there's a tax of 30% right now. So how much was actual taxation? Suppose I win 100 rupees, I will deduct 30 rupees on that. How much is actual tax due? So that
So see, I'll tell you, I am a part of ByteDance, and ByteDance, is a flagship company of TikTok, right? I know all this content, all these digital companies, right? I've been part of ByteDance TikTok for last 3 years, right? So as of now, there was a limit of 10,000. Right? So if you earning only beyond 10,000, that too only per transaction. So let's say you play a game and you earn 5,000, you're no tax, no need. I think some startups also do not ask for KYC, your PAN and all that, and you keep winning 5,000 every time. Your winning does not go beyond 5,000. There is also a backend that they actually limit the winning. Somehow they limit the winning 99999. Now you know the reason why. If it is goes beyond 10 or 10,000, you will get tax. Now the government has tracked that part. The government is now actually doing a very good data analysis, I'm telling you. So government is saying that these individuals are getting money, but not paying tax. They are not even declaring in their income, right? So now government want to track that, and that's how they increase the tax base. And if now there is no limit, even if you earn a 5 rupee, directly 30% will be deducted. So you will get only the, I think, 3.5, right? And you have to, and now KYC will have to be required. You have to provide the PAN. Now see the shift for the startups. It will increase the KYC compliance. They have to get the PAN. They have to change their backend functioning as well. Their tax team will have to do the calculation again. So their backend system will get changed. It's a compliance cost. For the individual, now they have to disclose that income, right? And because of that income, you may have to report another income as well. And now you file a tax return. So it increases the tax base for the government as well. So it's an indirect, again, through the startups impacting individuals.
But how much is the tax actually? It comes under the speculative income. This thing, actual tax due in dot is 40%, I believe. 40%.
Sorry?
How much is the actual tax on these kind of earnings?
So it is as per income slab rate. So if you, the TDS, it's a tax withholding. The tax withholding is 30%, but your income as per your income slab rate, because you are an individual.
Okay. Perfect. I think that's the questions we have for this thing. Over to you, Vikram. Thanks, Rahul. That's an excellent session. We have been getting messages from some clients that it's really informative. Thank you a lot. Vikram, over to you.
Thank you.
One last question, Rahul, before we end that. Is there any changes on the NPS treatment or annuity taxation, or
I've not read about this. There is nothing in the proposal, I guess, for the NPS perspective.
Great. Thanks, Rahul, for being here. Thanks, Ashish and Manaraj, for addressing the question and answers. It would be a great pleasure to extend our token of appreciation, to Rahul Jain. Thanks for being here. We'll see you. Thanks, everyone, and we'll see you in another Bellwether talk very soon. Have a wonderful weekend ahead. Thank you so much.
Thank you.